Hey everyone, happy new year, happy 2021 to everyone. Hope you guys were all able to take some time off, reset, from very likely the comforts of your own home, unless you're a politician and you were down in the Caribbean, secretly taking some time off. But thanks for joining us. We felt that to kick off the 2021 season, we wanted to get right into real estate. We're going to have a bit of almost like a forecasting discussion. Where do we see specifically Toronto real estate going? And to help us with that, we've brought on one of our partners, one of our expert colleagues, Ming Lim, head of advisory at Volition. Volition is one of our, Toronto-based real estate brokerages who specialize in turnkey investment realty services. They help not only clients purchase their first home, but a lot of what they do is help clients acquire and build their real estate portfolio and build wealth through their experience in the Toronto market. So I don't know if I got that right, Ming, but thanks for being on the call, man.
Yeah. Thanks for the awesome introduction, Hugo.
So I see it looks like you're in a home library or something, or home office, which is pretty cool.
Yeah, everybody thinks this is a virtual background, but these are legit books. They were bought for decoration, but they're legit books.
I'm about 36, and I remember back when I was much younger, encyclopedias were kind of a thing. Like you would buy encyclopedias, and that was kind of the source of, that was basically your Google back in the day, is you had these encyclopedias at home. Is that kind of what that is? I can't really make out what those books are. Are they law books or something?
They're actually old law books. So my brother-in-law is a lawyer, and he picked these up, kind of for decoration, but they ended up in our library.
Cool.
So
I feel like if you pull back one of those books, you have like a secret
secret door opens, right?
Yeah, some sort of layer where you're concocting some master plans or something to take over the world.
The back cave is back there.
So you have a good New Year's break, despite COVID and everything else you're having to deal with?
Yeah, it's interesting. You and I were chatting a little bit before this, and it was a break, but I'm not sure if you found as well. It seems like a lot of people are kind of getting ready for the spring market. So while it was quieter, everybody was kind of like pinging me saying, "Hey, Ming, are you free in early January? Let's connect again in early January." And there was quite a bit of that happening. So kind of leads me to believe that the activity that we're seeing happening in our brokerage and maybe in your side as well, that spring is going to be a pretty hot.
I feel like it's almost psychologically like a disruption to our cycle, because typically you would take some time off, maybe travel, and you almost reset. People will come back a little bit more refreshed, maybe wait to buy real estate until the typical spring market. But I feel like if you're spending all this time at home, everything feels relatively the same. So these cycles that we normally see, I feel like are very different. That's kind of been my experience the last 6 months or so, is there is not really a cycle. Everything's just sort of been consistent once we got out of those first few months of March when COVID initially hit, I find.
Been seeing the exact same thing. I think typically December's drop off a little more for us. So because people physically are not around and they're not, the headspace is not into buying real estate investments. But this year we were busy right up until just a couple of days before Christmas.
Toronto saw record numbers I was just reading something in December, which is I think the most sales transactions in Toronto real estate happened in December just a few weeks ago, which is crazy.
Yeah. I haven't caught up on the numbers and the news yet, but I saw the Vancouver headline. It was like up like 35 or 38% for a typical December, and I'm not surprised to hear that at all, because that is what we were seeing ourselves within our brokerage. A lot of deals happening and closing off in December, and this is kind of in spite of decreased inventory, which we typically do see in a December. It was still pretty busy.
Well, so what are some trends, I guess, going into the new year, like with a bit of a COVID lens? What are some trends that you're finding for your clients, and what kind of discussions are you having now that you weren't having before? Going into the new year.
Yeah. So in terms of trends that we're seeing, we're very data centric. I'm sure you know that, Hugo, but the listeners on the call might not know. So we do a lot of tracking things like home price index, neighborhood by neighborhood data. And so we actually do like kind of real trend analysis. And what we're seeing is kind of in line with the headlines, but not exactly what's with the headlines. So the headlines are all like, oh, mass exodus from Toronto. The reality is that it's not quite a mass exodus from the city, but it is a movement from small square footage neighborhoods to neighborhoods that have more square footage. So where we are kind of, if I'm going to say mass exodus, what we're actually seeing is movement from the very downtown core. So like financial district, where people are typically in really small condominiums, and rents are down there, average home sale prices are down there, and those folks are moving to neighborhoods where their homes, right? So they've got more square footage. They may be working a little further out, kind of into the suburbs, but people aren't moving into some farm in the middle of nowhere. They're just moving for more space, and that's really the big trend that we're seeing, which is a little perhaps different from what you're seeing in like Toronto life with people leaving the city entirely. It's more just for more space, and this is reflected when we look at the rental prices, the change in rental prices at a per neighborhood basis. The majority of that rental price change has happened in that downtown core. We're seeing about a 20 to 30% decrease in rental prices in those condos, those really small condos. But if you even just go like one or two postal codes over, let's say, I don't know, like Little Italy, for example, or Dovercourt, Wallace Emerson, some of these neighborhoods in the west end of the city, their rental prices, they've come down, but it's significantly less, maybe like 5%.
Well, it just logically makes sense. I mean, if I didn't have to work in a 500 or live in a 500 square foot condo, and I can get relatively the same cost in a bigger space, a few, neighborhoods over, I think that does make sense. Now, I guess my next question is, there's been a lot of conversation around condos and valuations of condos. I know in my world, a lot of our investor clients have been a little bit more hesitant to purchase condos in the downtown core because the valuations are a little bit, fragile right now. But I guess, given, we don't really have an exit strategy or an end plan here with COVID. We don't really know how this will all play out. But, just high level, what are your thoughts on the condo market in Toronto in general right now?
Yeah, so, going back to the data that we're tracking, what you're seeing on your side is reflected in our data. We saw the condo market kind of hit a peak through February and March, especially kind of through the downtown core. That has dropped off in terms of real value. So what I mean by real value is we don't look at average transaction price, right? Because average transaction price doesn't really tell you very much. There could be a lot of activity in the top end of the market, and that pushes up average, or vice versa, it lowers the average, but it doesn't tell you what's actually happened to your property. We use things like the home price index, which tracks, in our case for condos, 2-bedroom, 2-bathroom condos. We're tracking that. We track others, but I happen to have that in front of me. And we're looking at that average sale price over time. So that way we're looking at like for like properties when we're looking at the data. And we're seeing probably about a 10 to 15% drop in pricing. And that trend looks like it's continuing into kind of the early parts of this year. When I look into the December data, it's still trending down. Now, so if I didn't have to sell, I wouldn't be selling my condo right now. I don't think it's the best time to be exiting if you have some of these properties in the downtown core. If you're able to continue to hold on to them, that's going to be your best strategy. Because I do believe that the movement that we're seeing in terms of people going for more space, it's not a long-term trend. We already know this because there has always been the option for you to live in the suburb or live in more space and then have a commute, right?
Yeah.
While there's no commute, yes, people will want space, but at some point, commutes will return, right? When that happens is when we'll start to see a recovery in rental prices and condo prices, because let's face it, if there was no COVID, you and I would be meeting in person. It's way better to meet in person and talk about things. If we're doing work on our respective businesses, we want to get together with our business partners and throw it up on a whiteboard. Zoom sucks for this stuff. Like it's just not the same.
Yeah.
And I know this is the challenge that everybody's having, right? So commuting will return to some aspect. And at that point in time, people are going to have that trade-off again. They're going to want to live in a smaller space to have a much shorter commute.
Well, I was going to say, I think there's a bit of a novelty to, hey, you know what? I can work from home. This is pretty exciting. I'm going to work from my cottage or from wherever. But at the end of the day, maybe I'm just speaking for myself, all the amenities of living next to a larger urban area or somewhere that has a lot more amenities, are no longer available to you if you're moving significantly far away. And I think some people are like, you know what? It's great to have more space, but I also have to, I have a lot less to do, a lot less amenities available to me, and I kind of miss that. So I think, psychologically that might, bring people back. But I think just in general, I mean, the Canadian, when immigration sort of goes back to its regular levels, what is it, 300, a little over 300,000 per year, people generally move to larger urban areas where there are access to jobs. And I don't know how those jobs will look like in the future, whether they'll be remote or will there be a combination of both. But people need to live somewhere. And I think there's larger urban areas like Toronto, Vancouver, Montreal will continue to see growth over the long term. And I think I do see this as a short-term blip. This is, to me, doesn't seem like a long-term sustainable decline of the condo market, which would be a lot more concerning for Toronto economy as a general, to be honest.
Yeah, definitely. I mean, the trend of urbanization, people moving from rural areas to urban areas, is something that's been happening for like over 100 years now, right? People have been leaving farm agriculture and coming into urban areas, and that's been just intensifying more and more as years have gone on. That's a change in the way that we live as a society, and this is a global phenomenon. There have been pandemics that have happened during that time, and there've been blips, and people still urbanize, right? So I think that this pandemic, it won't fundamentally change society in general and the urbanization of society in general.
It just sort of slows it down temporarily.
Yeah.
So Ming, I know you work with a lot of real estate investors, help them, build their net worth, build their real estate portfolio, help them transition potentially from a salary type job to being financially, independent. What are some of your thoughts on real estate investing in Toronto? And, if I was looking to purchase in Toronto, perhaps an investment, what are some initial comments you'd make on that and thoughts?
Yeah, I think, Toronto has always been a very challenging market to be a real estate investor in. It's not like you can just go buy a house and rent it out and you're good. You'll be cash flow negative. You'll be losing money if you do that. And you can't scale a portfolio like that either. The more houses you get that are losing money, no bank will want to lend to a losing portfolio, right? So, more than ever, sophistication in your investing strategy is important. And so I think what's really key here is getting a multifamily strategy. That's what we've always done. That's kind of our bread and butter. Condos have their place, and obviously buying multifamily in Toronto is quite expensive, and condos are great stepping stones to help build equity, build capital, so that way you're able to execute on more sophisticated strategies. But right now, especially because housing prices have increased through 2020 and rents have decreased through 2020, you need quite an effective strategy which allows you to purchase an expensive property, but get you rents that are able to still hold that. So for us, it's triplexes, triplex conversions, fourplex, laneway houses. Some of these, what I'd say are more sophisticated, more renovation intensive strategies. But these strategies still allow you to, even in a depressed COVID market, allow you to be cash flow positive, and get good tenant profiles. If you've ever invested kind of in, let's say, seedier or less nice areas or rougher towns, you'll know as an investor that having a good tenant profile is absolutely key, especially in Ontario, where if you have a bad tenant, it's pretty much near impossible to kick them out.
And I think we would have experienced that to a very high extreme during COVID when people potentially did lose their jobs. And if they were a bad tenant, they probably became even a worse tenant at that point because they weren't going to pay.
I think one of the things that we really kind of, I was saying one of the things that really we lucked I say lucked out. It was partly strategy, but also, it wasn't a pandemic that we were preparing for. I don't think anybody was. But when pandemic first started, I'm well connected with multifamily investors in various cities, and they were seeing maybe about 25 to 30% of their tenants unable to pay because they were, in their working class, they're in retail, whatever it happens to be, but their jobs were affected quite immediately and continue to be affected through the pandemic. Because of the target demographic that we were after, it's primarily knowledge workers, people in consulting, people who are in medical, lawyers, whatever it happens to be, but they're knowledge workers. And when the pandemic hit and continues, their reality hasn't changed as much. It's more like instead of working in the office, they're just working from home now. So out of the about 400 to 500 units that we represent with our clients, we actually only had two who lost their jobs in the beginning of the pandemic, which was pretty extraordinary, actually.
Yeah, hey, that's a good point too. I mean, the reality is if you are purchasing a property in a city like Toronto, you're probably going to be on that side of the equation, and the impacts are going to be a little bit lesser for you because you're right. A lot of our clients, not too many of them have been affected by it, at least in terms of directly, like they no longer have a job. And they've continued to make their mortgage payments, continue to look at taking advantage of the very low rates that are available now, and how to benefit from that or refinance from that. To for our investor clients, how do I take money out of my property at a low rate so I can buy more and take advantage of sort of this potentially once in a lifetime opportunity to grow my my portfolio. So I think I look at everything with a very positive outlook, regardless of where we're at. I think COVID, as bad as it was, and it continues to be, I think there's some positive in reflecting on what we're doing and how to improve and adjust so we can be ahead of the curve. So that's kind of always been my perspective. So you've got a mastermind, which I think is a great way to start the 2021. I know a lot of people set goals for themselves. In my case, I've been telling myself every year I'm going to hit the gym really hard and lose a bunch of weight and have a crazy six pack, but it hasn't really happened. But I think on the financial side, if you want to, set your financial goals, your real estate goals, you guys are hosting a very comprehensive mastermind session at the end of this month, January 30th. I'll put some details along with this video, but I mean, we're going to go into a lot more. You'll be able to cover a lot more stuff in terms of what kind of areas are attractive to invest in, what is essentially the format, the correct way to go about evaluating properties and building a proper portfolio, and I'm sure a lot of other stuff too. So we'll put some details there. Anything I missed or anything you want to cover, before we sign off?
No, that's it. We take a different approach to investing. It's definitely a more boring approach. we're very fundamentals and data driven. So we spend half the day talking about like what are real estate investing fundamentals? Why does a property go up in price? Like how does public transit affect it? How does infrastructure affect these kind of things? And it's not the HGTV slick, sexy, like flip type stuff. This is getting down to economic fundamentals. So it's not for everybody, but it is certainly for those who are pragmatic. It is the type of investing that can.
But to be fair, well, I think real estate investing should be extremely boring and unsexy. I think it should be like, I have a bunch of properties, nobody calls me and bothers me, money's coming in, everything is good. I think that should be, at least for me, the level of real estate investing experience versus a lot of these individuals and there's nothing wrong with this, like they're just flipping high risk, high return type strategies, sort of up and down cycles. I think for me personally, it's almost like a very good investment portfolio or in the equity markets. You just sit on it, don't think about it, and continue to do your thing and build up this very strong equity and net worth over time. So I think there's nothing wrong with that, man.
Yeah, well, and you, sir, are an experienced investor. That's why you like boring. I think anybody after investing a while appreciates boring over exciting.
Yeah. But hey, man, thanks for being on the call. I appreciate it. Look forward to the event a little later this month, and thanks for having you on this Rant, man. All the best in 2021. Yeah. Hopefully we can have a little bit more in-person meetings and things like this. But thanks again for being on this today, man.
Yeah, thank you. And Hugo, Hugo will be at the event, Hugo and Dave, at the end of the month too. So if you want to get more Hugo, and I know everybody does, you get you'll get a chance. Thank you so much, sir.
Cool. Thanks, man. Appreciate it, buddy.